us. We're looking at bond futures, which should be up and running at any point now. 0.5 of 1% to the upside. But again, sterling, there we go, 134, 135. Anna.
David, thank you very much. David Ingles on your markets. Let's stick with the markets theme and get the views of Active Trades FX strategist Ricardo Evangelista, who's joined me here on set. It is 17 minutes past midnight. Ricardo, thank you very much. FX strategist, though, across Europe, across the world, up, watching the trade news and watching the UK election. Let's start with the UK election then. We see the pound against the dollar up by 2.25%, 134.57. Going into this election, it was an assumption that there would be a Conservative Party majority. That's what the polls had been showing quite consistently. And yet there was still more in the tank, wasn't there, for sterling when this exit poll came out. Do we cling, do we hang on to these gains, do you think, overnight, just focusing on the very short term?
Well, Anne, it's a pleasure to be here. It is true that the base case scenario was pretty much what we are witnessing now. So a Conservative win with a comfortable majority. However, we know that in the past, especially in the recent past, polls have failed spectacularly. They did, for example, with Brexit, they did at the last UK election, and they did with Donald Trump as well. So I suppose that many traders out there wanted to wait for the exit polls and then make a more decisive move.
Which is a poll of a different variety, because it's based on asking people as they come out of the polling booths, what did you actually vote for, rather than a sort of speculative question into the future. Let me ask you then where we go next on sterling, because, of course, if we have Boris Johnson with a big majority, and that's what the exit polls suggest he is going to achieve here, if we have that, we get Brexit done, perhaps by the end of January, as he suggested, but then we're into a very complex negotiation about the future trading relationship, and going out on WTO terms is, I assume, still possible at the end of December 2020. So what does the market do with that kind of information? Where does the pound go?
Well, it is true that that somehow caps the upside for the pound. However, I believe that a strong majority for Boris Johnson will somehow free him from some of the pressure that he would otherwise get from the hardliners within his own party, from the ERG, for example. Therefore, I believe that his stance will be more constructive, more conciliatory and more positive. And therefore, we have a better chance of negotiations with the EU going in a smooth way. And also, he will probably be more flexible in terms of extending the negotiation period, which he said in the past that he wouldn't. Of course, we are just speculating at this point. These are just exit polls. Exit polls also have failed in the past. So if these exit polls are confirmed by the final results, there will be more upside risk for the pound.
Yes.
We can see it going up to 35, 36, maybe even more. However, these gains for the pound will be capped by knowing that at some point in the future we can still have a hard Brexit in some form.
And Sherry, I should point out, exit polls have been wrong in the past. They were very right last time around, 2 years ago. Very wrong back in the early 90s, though, when the methodology was very different. So, of course, that's something we need to bear in mind when looking at this polling data.
And it's not just a polling data, right? You also have to take a look at perhaps the UK economy. So, Ricardo, what happens if we've continued to see the economic momentum in the UK falling? This GTV chart on the Bloomberg just showing that the UK economic surprise indexes remains in the negative while underperforming both data from the US and Europe. So if you do see perhaps the BOE forced to move, how would this keep a lid on sterling?
Well, it is true that we are living through interesting times. So we've had over 3.5 years of uncertainty about the outcome of Brexit. This has kept investment on hold, it kept spending on hold, and it hasn't been good for the UK economy. Considering this scenario that I just described, you can say that having 1.8% GDP growth year on year is actually not such a bad result. So there is a degree of vitality in the UK economy. And also we can expect what some would call a Brexit dividend. So with a smooth resolution for this Brexit saga that has been dragging on and on and on and holding the economic growth in the UK back, that will give a new push to growth. And of course, we have to look into the global context as well. and what happens within the trade dispute currently ongoing between China and the US will also have a more general impact. That will also condition the sentiment of economic operators out there. However, I am moderately optimistic, and I think the main issue for UK-related assets is still Brexit and the way it will be dealt with.
How much would dollar strength play into your calculations? Because I've heard lots of analysts saying that perhaps the U.S. economy is the best house in a very, very bad neighborhood.
Well, there is definitely an element of truth in that statement. It is true that dollar strength will play a big role. It will be interesting to see what happens in the U.S. The U.S. economy and its growth is being driven mainly by consumption, by internal consumption, and that may be coming into an end. So we may be facing the end of the economic cycle in the US, and that will more than likely have a negative impact on the dollar. So we should expect in 2020 to see some dollar weakness.
Dollar weakness in 2020. And in terms of the Bank of England, where we go next here, we've got the domestic story around Brexit, of course, and that will no doubt dominate. But this is a very open economy, very exposed to global trends, and trade tensions have weighed on key trading partners such as the Eurozone. If we see some of those trade tensions alleviated, that could also be a bit of a positive for the UK.
Yes, most definitely. So the monetary policy of the Bank of England will, to a large extent, be dictated in the next year and the years to come by the health of the relationship between the UK and its main trade partners. Of course, the EU is the UK's main trade partner. There will also be scope for the growth of the UK relation with other trade partners globally. Now it's free of the so-called constraints of being in the EU. Therefore, I think that the policies of the Bank of England will reflect the developments that we will have. It's too early to talk about that. I think that if the results of tonight's election are as we expect now, then we can see a new governor for the Bank of England that will have a more pragmatic stance, maybe someone who will be better versed in the arts of fixing interest rates and actually running monetary policy rather than what we would otherwise see if there was a hung parliament, for example. We would be more likely to see something more of a politician like we have in the ECB.
Well, with a big majority, does that tempt a government into putting pressure on a central bank? We haven't seen that very much since the Bank of England was made independent back in, 97, Ricardo. But that's something we see that in the United States a lot, don't we, with President Trump and Jerome Powell. If the new government, if Boris Johnson's government appoints the new guy, the new person at the Bank of England, is it somebody they can put pressure on?
Well, we would like to think that that won't happen, although, as you said, there is a global trend at the moment for governments to apply political pressure over central banks. We see it in Turkey. We saw it very recently in Turkey. We see Donald Trump in the US constantly tweeting and making statements, not always very kind, about Jerome Powell and the policies of the Fed. So I wouldn't completely discard it. But once again, I think that with a comfortable majority behind him, Boris Johnson will be a more conciliatory figure, and I think he will probably hold back from doing that.
There seems to be pressure not only on central banks around the world, but also on governments to do more. We have seen more stimulus measures coming out of Japan as well. Are we going to see something like that in the UK and in the Eurozone? And if that happens, how does that play into the currency markets?
Well, we are already witnessing a scenario like the one you described in Europe. I mean, there's talk about the need for fiscal policies to support the monetary policies and the policies of central banks. So I think in the medium to long term, that is the way to go. Central banks are a bit short in resources at the moment in terms of what they can do. The scope is no longer what it used to be. Interest rates are at levels that are historically low. We've had a very prolonged period of asset purchases for the main central bank. So I think we will need to see an extension in terms of the policies applied to stimulate growth and to get the economy back on track. And I believe very much that fiscal policies, for example, will be one of the paths.
Ricardo, thank you very much. Thanks for joining us. Ricardo Evangelista. We will hear a little more from him later on in the programme. Up next,